Okay, so I just started the recording. So I wasn't going to record this, but I'm gonna go ahead and record it for y'all. So those of you that weren't able to join in, y'all can see kind of what's going on. So pretty much what we're talking about right now is measurements off of certain reversal patterns and how you can approach them in the market. So let's first, for example, if you see a reversal in the market, and this works not just for double tops or double bottoms, but even if it's an inverted head and shoulders, you can take the measurement of the smallest shoulder and then you can measure that to the neckline and you can get almost a 98% accuracy of where the market would at least go before it turns around. So the head and shoulders pattern doesn't always have to continue all the way up and go up here. It can literally go slight break above this, neckline, and then you'll see it turn back down and the market continue in, let's say, a bearish trend. But it came, it showed this reversal pattern in already in a bearish market, but this is a bullish reversal pattern. So you typically would expect it to go up. But like I was telling you guys, earlier, that these patterns, at least for the head and shoulders, they're not as accurate as they used to be. So for this example, what you would want to do is take the smallest shoulder, which would be this, to the neckline, which the neckline is here. And then you would expect at least a 46 pip push up above the break. So you want to measure it out equally with that last one. And then you can expect the market to at least head to this level before we turn around for that reversal. So just kind of putting that into perspective of this double bottom here in this reversal, what I like to do personally is only go for around 75% of the actual reversal of the move. So I don't like to go for the full 100%. So if we just kind of measure this out, if we just kind of, break it down, right? So just break it down in fours. This is 25%, 50%, 75%, and then 100%, right? So I try to at least go for only 75%. That'll put me at almost that 100% mark of we're more than likely going to hit the TP as long as, structure and the directional bias is correct. So in this case, on this double bottom here, if we take that smaller shoulder and we duplicate it, so let me just move this while I just leave that there. If we duplicate it here, then you'll get pretty much an estimate of where you would want to go, right? And as we can see, it equaled out. As long as you go for the smallest shoulder, you usually will always, like I told you guys, you'll get a high accuracy rate of the market actually headed to that area, versus if you take the bigger shoulder, it's like you're being greedy. If you take the bigger shoulder because you want 141 pips, you'll more than likely miss out on your TP, and that's just you being greedy in the market. So that's why it's more better to take the more conservative approach on that just specific situation, so you don't miss out, because then you would have been expecting the market to head all the way up here and it wouldn't have did that. It would have turned around early on you. So again, always go for the smallest shoulder. So if that's one thing, and one tip I can give y'all is always go for the smallest shoulder. So 75% of that personally would have ended us out around here. So pretty much a smooth in and out of that trade, and then we've kind of left it alone. So that's kind of usually how I work. I like to get in the trade, go for a good amount, and then kind of hop out. So I usually don't even go for the full 100% of my trades. I usually go for around 75%, even if my trades are not. I usually just hop out. So around TP2 is usually where I usually get out of the market. So that's just me personally. So just kind of flowing with the trend right now. I'm just kind of breaking down trends so y'all can kind of see what's going on here. So we can clearly see a nice bearish trend on Euro USD, and we can see that reversal that we just highlighted here from the equal highs. And so now at this point, we're headed back towards the downside structurally. So just breaking this down with y'all. So as we head towards the downside, there's a couple areas that you guys want to keep in mind. And when we head down, you want to always look for, when it comes to retracements, you want to look for untested supply and demand. So in this case, we want to look for untested supply. So to find supply and demand, and this is something that I use heavily for when it comes to entries, to find supply and demand, it's usually easy to fluctuate through time frames to find the more clear zones. So let's say on the 4-hour, this was a little bit more choppy and harder for us to see. Let me see where we're at. Here we go. So just a little bit more choppy and harder for us to see. But what I'm seeing right now on the 4-hour, I can clearly see where I want to look for them. It's going to be here, and it's going to be here. These are the two areas I want to actually look for the supply and demand, and I can see them clearly already. So if you go to the daily, you should be able to see them a little bit more simplified. So let's go there. Here are the areas. So I want to break them down on the daily so y'all can see them. Let's clear this up over here. And so I appreciate all of y'all for tuning in, man. I appreciate all of y'all for joining the chat room. I'm just kind of coming out of my little hiding place. I've been trading just solo for a little bit, and so I'm trying to get back active with y'all. So my gift to y'all is sharing my trades, sharing my knowledge, and hopefully y'all can, take that, run with it, turn up with me as we go into the next 2 years of really just going real hard. So just to kind of narrow down these supply and demand zones on the daily time frame, here are the perfect areas of where we would want to put these. And so what I'm going to do now is highlight both of these so we can see what's going on. So as I highlight these to kind of give you guys an explanation of what I did run down before I actually started the recording, just giving some of you who don't know me personally, I've been trading for a while now. FXK has been running for a while now as well. Literally, I mainly focus on swing trading and intraday more so style of trading. I'm not really a fan of scalping. Even though I don't have a problem with it, I would love a short-term trade. I just personally focus on swing trades. There, to me, I can see the accuracy behind them a lot more. Pinpoint to me, so I prefer swing, and I don't mind entering a trade and just kind of letting it run. Overall, I've been trading over 7 years, man. I've seen a lot just as far as in my trading time. I started off with IML. So this was like 7 years ago. I started off with IML in that whole industry. I was only in that industry for like 6 months. It just wasn't for me. They were mainly, back when I started, they were mainly focused on the sign up kind of portion more so than the actual trading portion of things. So it just wasn't for me. And so I kind of ended up branching off doing my own thing. But I did learn a lot about the basics of that from that industry. And that really was my foot in the door to actually trading a long time ago. But the things that happened back then, like back then IML started, right? And then IML crashed because Christopher Terry wasn't paying everybody their money. And so everybody left IML, went to a company called Kaizen. And so we were all at Kaizen for a minute. And then that was bullshit too. So then everybody left Kaizen and then went back to IML. And so ever since they went back, it's been doing good. So, kudos to them. But as far as me personally, I love the charts. I'm just more so focused on main charts. I don't really care about, the whole IML side of things. And yeah, the MLM side. So that's just a little nutshell of me. I don't want to kind of bore y'all too much of that, man. So just back to the charts. So right now, the two areas of interest that I would even look for would either be here or here. And so at that point, once we have the area of interest, what I like to do then, and I'm going to try to make this as simple as I can for y'all so it looks very clear. And once I have the two areas of interest, then at that point, we then break it down a little bit more by adding a couple of other things that we use and tools, but try not to put too much on the chart, right? So first thing I love to always put is a Fibonacci. And so I'm going to look for at least the 50% or the 61.8% percentage retracement. So somewhere in this zone, to me, would have been perfect and more ideal. Even though we didn't get all the way up there, somewhere in that zone would have been like the super trigger spot. Now, understanding that we do have our median aligning right here as we come into the actual trade, right? And the actual supply zone, that was another indication that would have let me know, okay, hey, we might not come all the way up here. We might only come down here. So that's when you'll see at a point to where I extend the box, and now the box is a little bit more wider of the range. So now this is the full range of the trade of where anywhere in this zone, we could potentially see that reversal. And so as you guys can see, we got that reversal. So what I would also look for on the lower time frame, as you guys know, is I'll usually put on the chart, watch for a sweep. So look at this area. Look how we got a clear resistance. We got a double top here as well. We'll break that down on a lower time frame. And then I'll put something like this, watch for a sweep, right? So we have a clear resistance. Usually when we have something clear like this, but we haven't mitigated price action. So when you reach these two levels, you're mitigating price action. And so at that point, once you mitigate, then the market's ready to move. So since we haven't mitigated, that would have let me know already that price action needs to push back up to take the highs. So here we got this. Oh, so it's actually not even a double top, triple top. Either way, reversal pattern, right? So bearish reversal pattern, triple top. So in this case, we got a triple top and then we got the reversal. So same thing, even with the triple top, you can still take the same measurement. So in this case, the triple top is here, right? So we would take 43 pips and we would go for around, I guess, 30 pips, right? So 31 pips or so. So we would duplicate this down 31 pips and that's where we would go for the TP. So that's when it comes to measuring out price action structures, reversals, things like that. When you can actually take you can actually just take the reversal. You don't have to take the actual full move. So now I'm showing you guys how to actually, you can scalp this. So this is scalping necessarily if you want to scalp something like this. So not necessarily waiting for the full move, but just taking this structural trade alone, you could have made at least 30 pips. Now, seeing the clear highs here, to me, and knowing that we haven't mitigated, this was a clear indication that price action is going to come back up and actually take the sweep. And so that's literally what we did. We would take a sweep and then we would drop. So knowing that it would also be a sweep, that lets me also know that we're not going to come this high up, because usually when you get a sweep, you're going to get a quick pop up to take the orders here and you're going to get a decline, or you're going to, depending on the direction of the market, whether it's going up or down, will depend on the direction that you get the movement. But you're going to get a quick movement above or below, and then you're going to get that push away from that area. So that would have let me know that not far above this is where we would have actually got the trade. And literally knowing that this was the mitigation point, I would have actually targeted right before we got to the mitigation point. So that would have actually been my entry. Unfortunately, we would have had to come a little bit deeper and probably would have had to have that 67 pip stop loss. But the good thing about it is that we can also take the measurement. I'm showing y'all a lot right now. I really am, because this is fully how you're breaking down the market from every move, every angle. So you can take the measurement. So now you want to know, okay, how far are we going to go down from this retracement? So now you can take this measurement, boom. So we have 163 pips. So you can divide that against 75%, right? So we can say that that's an estimate of around this area here. So if we grab around here, we're not trying to make it perfect right now, but just around here, we can say around 128 pips, right? So if we look for 128 pips on the drop, that'll more than likely be where we see our next reaction. If not 128, we'll see it at 163 pips. So here's 128. So we didn't get it there. So the next level would be that 163 pips. So at that point, we start to get into the actual range of where we start to get like that choppy market again. So at that point, you just kind of leave the chart alone. So after we make that full percentage, and we were again only 128 pips, we would be out of this trade and we would be done. So you would take this sale all the way down to here. So when it comes to looking for your TP, you are going to have a 283 pip take profit, and you would have a 68 pip stop loss with a 4-to-1 ratio. So that's pretty much identifying that swing there. So as we continue to move down, just to kind of show y'all how the market moves and how you really want to look at these charts. So at this point, we get to a point of consolidation. So this is kind of like a dead zone. There's nothing really you can do right here. So always understand that there's points in the market. What's up, Abby? I see you, bro. What's up? Nidal, I'll run through NZD CAD as well before we end today's session, so you guys can have that update on what's going on there. So let's see. So at this point of consolidation, there's times in the market to where you want to trade and you don't want to trade, right? So always understand that not every week there's going to be a lot of opportunities. Some weeks you're just going to have to chill and just kind of let the market do its thing until it gets to a point to where you can see an opportunity. So at this point, this is literally a dead zone. There's nothing that we can do here. And then you have this, this is here to just start playing with heads. So you break above, and then you drop down, and then you break back above. This is literally just playing with heads. Now, there are opportunities within these points of trading to where you can actually take trades. So like right here, this came into this previous supply zone, which would be here. So we did get a slight break above, but overall into the supply zone, rejection out. And again, you're looking for that trade when you get the reversal pattern. So if you wait for that reversal pattern, it will save you even more on entering potentially false trades. So in this case, double top here, we can see it on this time frame where we have this M here. So M's and W's, guys, M's and W's. So double top, and then we got the reversal. So you could have waited until we got that double top print and then started to sell this down. So, and then again, sell, correction, sell. Usually you'll have 5 waves, correction, sell. And this is the last wave. So this is a little bit more in depth, and this is kind of going a little bit more Elliott waves. I'm not going to put too much of that on y'all. I'll break it down a little bit when we go over NZD CAD, since that one is a full Elliott wave structured trade. But for now, usually on the actual impulsive moves before you get a reversal, you're usually going to get 5 waves. So this is going to be that 0, 1, 2, 3, 4, and then 5. And at that point, you'll start looking for the reversal. So knowing here, again, always the way I trade now is looking and expecting for the market to trap and just kind of do bullshit moves and just extra moves, right? So just knowing that it wants to steal money from the average person first before it makes the reversal is going to get you guys ahead in a lot of your trades. So playing your trade according to the market of how it would steal the majority of people's money before it goes to where it needs to go, right? So in this case, how could it, if it's supposed to drop here and come to break and mitigate this level, how could it take everybody's money first? It needs to break these levels because there's stop losses all throughout here. It needs to take all of them out who are already in the sales, who have been waiting through this consolidation, this choppiness. It needs to take all of them out, right? And so at that point, when it's taking them out, it doesn't just want to take them out. It wants to trap the buyers as well. So you're getting this nice impulsive move. And this is starting to, everybody who closed out of these sales are now panicked and they hopped in buys, right? So all of them are now in buys and they already lost money on the sales. Then you have another group of traders who weren't even in the sales. They were just waiting for buys because they were expecting this to go long and to come all the way up here and to break these highs, right? And then at that point, they're screwed because it only came up a little bit and then it literally impulsively crashed. So at that point, the first round of people who lost money on the sales and then revenge traded into the buys are now double screwed because they lost money here and now they're about to get screwed here because they didn't want to take the profit on the small buy that they got because they lost so much here that they need to hold the trade a little bit more to make some more profit. We all know how that goes. And then at that point, they ended up losing all that profit that they potentially had. And of course, the buyers who were in long, they just either get closed back at entry or they just get closed out at their stop loss. So just understanding that the market is going to take out the majority of the traders before it actually makes the move will save you on a lot of false trades. And again, we can't get them all right, but the goal is to get majority right and to be consistent with getting majority right. So at that point, if I can tell y'all anything, at least try to trade with the manipulation. Trade expecting manipulation. Even if you miss the trade, it's cool. You just missed the trade. But if you do get it right and you're trading with manipulation, more than likely your entry is going to be prime and you're going to have a smooth trade to where there's not going to be a lot of stress or anything like that. You're just going to go straight profit. So as the market moves down in those 5 ways, you can count and kind of know when, okay, we might expect a potential reversal. So you want to look for the reversal, of course, after we make that last period of consolidation going into the 5th wave. So once we made this last period of consolidation, this last leg to me tells me, okay, we're going into the 5th leg. So once price action stops after this impulsive wave, that's when we start to look for the 5th wave. So once we cleared this low, swept this low, right, we then started to look for the potential buy here off of the 5th wave structure. So it's all about how you see the market, because everybody else would have saw this as a break of this low and they would have been looking for further sales. right? They would have been like, okay, it's ready to start dropping now, right? But if you look at the bigger picture and you start to break it down within, you can see what the market is telling you, and you can expect a potential reversal. So at that point, we're not expecting for market to continue down and go further down into the sales. We're expecting a reversal already. So at that point, we put everything that we know as traders on the analysis, right? And then we start to break it down and pinpoint those entries and things like that. So we were already expecting a reversal here just off of the wave count. If the market wanted to continue down further, it would have extended the wave count. It wouldn't have made all of the waves within this one period. We would have almost had one wave just this whole leg, right? And you'll see how it works when we go in this area. So like, for example, this right here is pretty much that one wave that this could have did. You see what I'm saying? But this broke them all the way down. This whole little big thing happened just right here in this little small push. So if it wanted to extend down further, it's going to make bigger waves. So I hope that makes sense to y'all. So at this point, we're expecting a reversal. We get the push up, right? And not every time you're going to be able to clearly see the waves, right? Because it takes for you to be able to break them down on lower time frames and really just pinpoint them out if you really can't see it on the time frame that you're on. And that's okay. If you don't see everything perfectly aligning, then honestly, you just move to another trade. You don't force a trade. So if you don't see everything just aligning on this trade, you just move to another trade. That's why I trade. I don't just trade one pair. I fluctuate through different pairs to show me kind of, what I like to see in the market, and, my type of trade style and setup. And if I can see something clearly, then I choose what I see clearly, not necessarily picking one pair, because a lot of times you'll end up forcing a setup if you haven't mastered that pair already to be able to trade it on every single up and down. You'll end up starting to force things, or you'll end up starting to make yourself see falsified visions in the market that probably weren't going to be accurate in the first place. So getting that push up, I'm trying to break Euro USD down as much as I can to give y'all as much education on structure and how the market moves. And I feel like this is the best pair to break this down, because it is a strong haven pair. So it is going to definitely give you guys a good insight and a directional bias on a lot of the majority of other pairs in the market. So just Euro USD push up. We see here we get into the equal high territory again as we started to mitigate out. But what do we also do? We swept this high to make sure we mitigate fully, right? So we take all highs before we actually make the drop. So seeing this, also knowing when you're expecting a drop, and this comes from experience of seeing the market. So I'm sorry, guys, a lot of this comes from experience. If you're not really an experienced trader or don't understand what I'm saying right now, then just stay grinding. Eventually it'll make sense. But the structure itself, knowing how we came up, this is not how the market wants to drop when it comes to printing a pattern, right? So this is corrective as it goes down. As it's going down, it's very corrective. When you get something like this, you're not expecting necessarily a drop because of how it's going down corrective. So that's already another indication that we're more than likely, and this kind of looks flaggish, but we're more than likely going to impulse back up just because it's breaking down correctively and not impulsively. So when it's ready to drop and drop, it's going to break down impulsively. Look how impulsive this is versus this corrective structure, right? So this is the indication that lets you know as a trader that, hey, yeah, and it doesn't mean that it's not going to drop, but it lets you know that it's not necessarily ready to drop. And just seeing everything that's going on here, you can probably see clearly that it's probably going to go back up to take another sweep of the highs. But also knowing that we haven't fully printed a clear enough pattern as well. So expecting a bigger pattern to print is something that we would have also kind of had in the back of our head. So after we got that sweep, an immediate decline, and you probably would have noticed it once the market got right here. This is really what have kind of told you there at that point, okay, now we're ready. And so at that point, you just got your impulsive decline. And we've already kind of done the measurement of how you would want to break this down. So again, smallest shoulder, duplicate that down here, and then that leads us into this range over here. And this is also a previous untested demand zone. that would have clearly told us where the market was probably going to head to. So that's another thing that you can kind of add on there. So as you guys have been noticing, as we've been breaking down the market from every single angle, this is all that I'm using. So again, there's everything else is more experience in the back of my head, and I can see the market and I've been doing this for a while, guys. So, but overall, you don't need 1,000 indicators, and you don't need all that stuff, guys. It's real simple. You just have to know what simple stuff to focus on. And a lot of the times these days, people are not really teaching you the main things that you need to focus on outside. Like they're teaching you, I would say, the basics of the stuff that used to work and not the stuff that works now. So, and it still can get really basic, but don't just think that it's just, a supply zone or it's just a demand zone. You have to understand when a supply and demand zone is actually going to be considered valid, where to properly place them. So I know a lot of people struggle with that because, some of you guys who are going to be watching this are wondering, like, how did I know to place it there? Or, so it's not just saying it. I know I might be making it sound really simple, but there's a lot to it. There's just like Fibonacci. It's not just it's not just a 50, it's not just a 61.8, it's not just a 1236, it's not just a 1618. Each of these levels means something, and there's a certain time when you actually want to expect the market to actually make a reaction off of these levels, and each of these levels also give you certain types of reactions. So you can almost expect some of these will actually give you a certain pattern more frequently than they would give you on the other. So you can almost look for like a double top at the 61.8. You're almost going to 90% of the time you're going to almost get a double top at the 61.8 almost every time. So that's something that you guys can keep in the back of your head as well. So the deeper the retracement, the more impulsive of the actual reversal move that you can expect. And so when I say that, there's every reversal move has a certain time frame that you can kind of put into play with it. So head and shoulders, there's a lot more movement within this, so it's going to take longer versus a double top is going to happen quicker, right? So triple top it's gonna take a little time. It's gonna take a little time. These wedges are gonna take a little time as well. So because they're gonna play around and bounce a little bit more, but that double top is gonna be usually your quickest one. But just understanding that there's different patterns that you can expect at different levels, and which will give you certain times of maybe how long it would take for the actual outcome to happen. So at this point, just breaking down the market, continuing down, correction. We can see here, so we're starting to, depending on how you trade, if you're more of a wave counting style, you can count waves if you can see it. So I can see the waves here, and I'll go ahead and plot them on here for you. So we start here 0, 1, 2, 3, 4, and again after 4 we're now looking for 5, right? And after 5 we expect a reversal and a more deeper retracement, right? So that's all it means. It just means at 5 we expect a deeper retracement. Me personally, I love to buy 3 and sell 4. These are high probable, y'all. These like 95% chance these gonna be right, just because you already can see usually what's going on. So at this point, especially after 3, 4 is the best one because you already see 1 and 2, so you already know what's going on. When you get to 3 and you see retracement, you're like, oh, okay, yeah, so 1 and 2 are definitely right. So at 4, you already know it's going to be a sell. So at that point, you can just sell the hell out of it down to 5. And the 4 and 2 are impulsive waves. 1 and 3 are corrective waves. So remember that 2 and 4 are always impulsive. So you're going to get fast outcomes from 2 and 4 always. So again, after 4, we already knew what was coming soon. It was 5, right? And after 5, we can expect a deeper retracement. So at that point, we look for areas of interest of where we can expect wave 5. And at that point, we break it down, right? And then we look for the trade. So did we take this, guys? I don't know. VIP team, I don't know if we took this. Did we take this? I don't think so. I can't remember. I don't think so. I can't remember. I don't think so. I know we took this by. I don't know if we took that. But again, 5th wave. So at that point, we're starting to look for the reversal, and then we put other things on the chart, of course, to kind of help us maybe identify where we might want to see it. As we can see, there's a demand zone here. We didn't get all the way into the demand zone, so maybe I didn't have it fully aligned perfectly. But nobody's perfect. Got a slight break above. Looks like I had a structural TL here that also gave us another potential indication of where we could have seen that reversal. So that was another area of where we might have seen it coming earlier than typically where we would expect it to go. So at that point, we got a reversal up. This is very ugly as it goes up. There are different types of, me personally, I like to break it down. If I can break down the waves, I will try to break them down. I think I did try to break this down as well. But the sale ended up coming here, and I was looking for a sale here. I know that somewhere in this area, but the sale ended up coming up here. But this is actually another form of an Elliott wave structure, which it might be an expanding. I'll show you guys. So I'm trying to give y'all a little bit more education than I would normally give out. So y'all can hopefully learn a little something today. As always, guys, if y'all want more education, then you would need to become a mentor student. So something kind of like this, we can kind of see what's going on here. See how we kind of have that, but we're heading towards the upside a little bit. So just something like this, we can get, it looks like almost, where are we? Euro USD. So do we see any type of, we could be seeing a 1, 2, 3, could be an expanding triangle. Did we expand on the bottom side here? No, we didn't expand on the bottom side. So it's not expanding triangle. So literally, as you learn, and I'm not, the best or the most knowledgeable of everything. So, I still learn as well. But you can literally come to, here, type the pattern potentially, and then, go to the chart and then relay it out. If you don't see, now me personally, there are certain patterns that I know, and I look for those patterns only. So if I don't see anything, again, like I told y'all, you just move to another trade. So in this case, if you don't see the actual pattern printing out clearly how you like it, don't force it. Just move on. If you can see another area of interest, then you can maybe take a trade. So in this case, we might not see something Elliott wave structure, right? But we can see something else as far as just normal price action structure through supply and demand or key zones or support and resistance, things like that. Like I haven't even went over support and resistance with y'all. So, and that's also charted up on here. We have our QPs and things like that. So there's so much that I can use to break down these charts and to break down the markets, but I'm really just breaking this down as simple as can be, because I guess it's just not as hard as it used to be, guys. So we can just make it simple now. Trying to make it as simple as possible for y'all. So not seeing much here. We probably would have missed this trade. Time moves on, right? So now we are where we are now. So a couple of key areas of where I was looking for price action too. I was actually looking for price action to continue down this. So what we were looking for is actually a push up into supply zone and then a drop, or a push up here and then a drop. So either way, I was still looking for a drop, but we ended up just getting a slight push up into the previous liquidity and then dropped. So at that point, what I'm expecting now, so that leads us up to this upcoming week, and this is a trade opportunity that you guys can look to trade for this week as well. And so for the next 28 more days, I'm going to be dropping free signals in the group for you guys in the chat room. So everyone that's in there, you guys are going to have free trades for the next 30 days. So what we're going to look for on this, we're going to look for a supply and demand on the lower time frame. So here's going to be one, and this is more OB than I would say supply and demand. So what we might actually get is straight into OB, and this is probably where we're going to sell for this week, into OB. And the only reason we're not expecting a sweep here is because the highs aren't equal, right? They're trending down. So if they were all equal, again, trying to give y'all as much education as I can in this short period of time. I know I can't make you guys wizards in an hour or so, but I'm trying to do the best I can. So if they were going to go for a sweep on this trade here, when we're looking up for next week, these highs will all need to be equal, and they're not. So they're literally trending down. So at that point, it would need to come all the way up and literally almost take out of that liquidity zone and back down. And so we're not expecting that. So what we want to see this week is literally push into OB and then a drop, to make it as simple as possible. And if I look on the lower time frame, there are no other areas of interest other than here of previous supply or demand or any other left behind liquidity. All the liquidity is here. So the mitigation is here. So this is where price action needs to come and mitigate before it can continue down. If we look at the higher time frame, and I'm really showing y'all this from just using so little, guys. So if you are using more when it comes to trading right now, then pretty much what I'm explaining to y'all, then you might want to reevaluate everything that you're using. So if someone else has you using so much more, behind these charts, then you might want to focus on more simplicity. If I can tell you anything, also behind the time of now to 7 years to 8 years is simplicity. That's the main thing that I've noticed that has changed over the years. Is my vision of the market, my trades, my charts, they become more simple and more simple and more simple. So focus on the simple things and master the simple things and keep a clear chart, so that way you're able to always see what's going on. So looking on the daily time frame, we haven't even went on the higher time frames, the weekly. We've been breaking these charts down. We've broken down Euro USD the last, where do we start? Here, since June, almost the last year, from just the 4-hour and daily time frame, right? A whole year of analyzing from a 4-hour and daily time frame. So just kind of let that sit in your head. So I know a lot of people analyze from the weekly and the monthly, but again, we did not go on the monthly or the weekly chart not one time when we just analyzed the whole year of data. So it just kind of lets you know what you might can focus on. I'm not saying that the weekly and the monthly are not important, but they're not needed. And especially, and you can still swing and see a higher time frame perspective without going on the weekly or the monthly. To me, the weekly and the monthly personally have always just confused me or added some type of confusion into the market on my bias. So I usually don't even try to go on the weekly and the monthly time frame. And that's usually because also when you go from the weekly to the monthly, it's almost like you're not expecting the market to have some type of manipulation. It's almost like you're expecting a smooth, clear move, and you need to be on a lower time frame. I would say the daily to 4-hour to pinpoint out those manipulation areas, or the potential areas of where the market would come and do those bullshit moves before it continues to a certain area. So my time frames that I love to use are going to be the 4-hour, in the daily, and anywhere in between. So you'll usually catch me on the 4-hour, 16-hour, or the daily time frame. So those are my favorite time frames. So we've pretty much broken down Euro USD already from a while now, from that data all the way down. So where we're going to expect this week, and this is also a candlestick that mitigates. So this is just more education, something I teach to the students, is when you're looking for a wick that fills. So most of the team knows what that means, is a wick that would fill. So this is a candlestick with a wick that would fill. So this is another indication that lets me know that there's more downside potential. Now the wick that would fill, it's only good for that point. So it means that it's only good for this level here. So anything after this level is a completely different story, right? But for now, it can at least head to this level to mitigate out this actual order range. So next week, what you guys are going to look for is a sell. You see that OB here, OB zone, and also have our median is aligning, more confirmation. So we have our OB, we have our median, and if we drop the Fibo, the 61.8 is aligning right before the median. So that's also just something lovely, because to me that's just always beautiful to see the 61.8 aligning within your analysis, because it's going to be a nice strong barrier when it comes to looking for a reversal off of it. It's going to probably be where the market truly actually turned around. So boom, that's our trade for this week, and we're going to take it down to the mitigation point here. And I do think that we can actually head down into this range, where we're just going to come back here. We're not going to go too crazy with it. So let me bring this up a little bit more, y'all. Cool. So we're gonna do a 2-to-1 opportunity on Euro USD, but this is a high probable trade opportunity for this week. So that is pretty much breaking down some things in the market. We're gonna go over next NZD CAD, so I can show y'all what's going on that, on the update. As far as indices, Night, I see your message. I really don't trade indices that much. Danielle is really someone who likes indices more. I really don't trade indices too much. So me mainly is just more so Forex and stock pairs. And there's only a few stock pairs that I trade. Those are the ones that I believe in long term as far as the vision. So I've been in Tesla for years. And I'm going to continue to stay in Tesla. I'm so happy and so proud with Elon and just everything that he has going. Just the visionary he is. Tesla is going to go crazy in the future, so that's definitely a good stock to have. If you're not in Tesla, make sure you have some Tesla stock, guys. So now let's go to NZD CAD. I'm not going to spend too much time on this one. And then we are going to wrap up today's educational session. Okay, so NZD CAD. So breaking this one down from a higher time frame, let's go up to the 16-hour time frame. And this is also now one of my favorite pairs, as long as it buys up. So if it buys up, I'll probably still, even if it hits stop loss, I'll probably still keep it in the bag, because it's, if it hits stop loss, this will probably, from my knowledge and me remembering, at least over the last 12 to 24 months, I don't really trade this pair much in the last 12 to 24 months. You can literally say in the last 6 months it's really been when I've traded this pair. But if we were to took, I would say 10 trades, I don't think I've lost any trades on this pair in the last 6 months. So this would still be the first loss on this pair. So I'm not going to just rule it out the first time we lose on the trade. But if I do get this trade right, this is definitely going to be side by side with odd USD. And for those of you that know, have been following me for a long time, I'm really good with odd USD. So NZD CAD structurally, where are we and what are we seeing right now? So just looking here, we'll try to start from this top here and kind of break it down. So we can see we reached a peak into the market. As you guys know, like I said at the start, always try to expect some type of extra move, trade with the extra move, trade with the mitigation. Yeah, odd USD, I love her, man. Really easy. It was an easy pair for me. The way it moves structurally is very clear, and so that's really why I kind of gravitated towards it at an early time period, I would say, when I was looking through different pairs and trying to pick one that I could really try to stick with and make my favorite. It was odd USD, and the results I got from it really were life-changing as far as for my trading career. It helped me mentally to see really what the market could provide me, and at that point it gave me the motivation to continue to trade, to continue to go hard, because I started seeing majority of my profits come in from odd USD. So at that point here on the sweep, like I was telling you guys, try to expect a sweep if you can. Remember that we got the decline. As the decline, we start to count waves if we can see them. So here we got again 0, 1, 2, 3, 4, 5. So after the fifth wave, we start to look for a potential reversal. One thing I have been liking about NZD CAD, and really one of the reasons why I'm going to make it one of my faves, is because it's been very clear on wave structure. You can see it very clearly. So 1, 2, 3, 4, 5. And at that point, we start to look for another reversal. And then we get that. Double bottom, you guys can see here. So you guys know what to do with the double bottom. How far will we go up? So, not every time you're going to get waves, right? So waves can sometimes show you how far up the market can go. So wave 5 usually finishes between 4 and 2. Okay, remember that 5 finishes between 4 and 2. So you see, here's 2, here's 4. So when it comes to how far up 5 can go, you want to expect it to go up into 4 and 2, into that range. Anywhere after that is just kind of done for, right? So now that y'all know that, taking the measurement off of wave 2, wave 5 on the double bottom, smaller shoulder, they're pretty much equal here. So it almost doesn't matter when they're equal. Clone, and then you duplicate. So that lets you know how far up you can expect potentially 95 pips. Of course, take the 75%. And at that point, you will TP around here on a smaller time frame type of trade, just off structurally, or just if you didn't see 5 fully, knowing that it would come up to in this point, just whatever. If you only saw the double bottom, you can know that you can go for at least about 60 pips, right? Cool. So 60 pips there. If you knew how far 5 would go up into the wave structure, then you know to aim for at least 4 or into this range. But personally, 4 is the safe point. So equal high of 4 is where you would look for. You see how we got to the equal high and got a decline? So equal high is where usually you can expect a potential mitigation. And so at that point, we started to head back up. So that also lets you know that, again, we already knew that it can come anywhere in this zone. So if it comes back up after already rejecting here, you already know it's coming deeper into the zone. And so at that point, then you can either look for sales, using other things that you have in your book of tricks, or you just leave it alone and you just wait for your next clear opportunity. So at that point, we declined, got to another consolidated point. Choppy area, not really much in this range, right? No trade. Peak and break up out of that. Finally, we're starting to see structure again. We're looking at the market, trying to see what it could do. Besides seeing mitigation in this range of potentially having equal highs, something like that, not really seeing much that would have told me this sell here. So yes, we can see the double top after, but when it comes to saying, okay, how do I know this might be an area of where it would sell? Me personally, I don't really see anything that would have told me. So after the double top, because we can see that here again, like I was telling you guys, always, hopefully I'm trying to be repetitive so this instills in your brains. But usually most reversals, you're going to see the best reversals, you're going to see double tops. So boom, dropping there, headed towards the downside. And at that point, now, once we start to form structures, seeing that 1 and that 2, remember how I was telling you guys, after you see 1 and 2, you almost can know what's going to happen, right? So boom, we get 1 and 2. Now we know what's happening. So now we got clear opportunities to buy on 3, and we got clear opportunities to sell on 4. We sold on 4. I think we sold on 2 and we sold on 4, and we've been buying up as well. So we sold on 2, we sold on 4. We tried to buy 5 here, but we missed the first 5. And so we ended up hitting stop there. We ended up buying this 5. We bought this 2. We bought this 4. And so now we on a chill point and we back in the buys again. So this is just kind of me breaking down a nutshell of entity CAD. So structurally, let me finish breaking this down so y'all know, because we're still in these buys. So I know some of y'all want these updates on what's going on right now. But a lot of times, if I don't push out an update, that just means I want y'all to continue to be patient. That just means the trade just requires more patience. Don't start freaking out. Just continue to be patient. I'm a swing trader. Remember that. I'm a swing trader, more so intraday, but more than likely it's a swing. So it's going to take patience. So just always remember that. So again, 0, 2, 3, 4, 5. At that point, we can see clearly it breaking back up. Remember how I was telling you between 2 and 4? So even over here on that side over here of knowing where we could have got that mitigation point. So see how we got here 2 and 4. here. So same thing. Where can 5 go? Between 2 and 4. So same thing here. Here's 2, here's 4. So where would 5 go here? Between 2 and 4. So boom, we come into 5 in that range, and we double out. Well, it's not really a double top, but we get multiple points of rejection in that range, and we didn't make a new high. So that's the point of where you know, okay, we're done. So if it would have made a new high, then you know, okay, we're going deeper in and then drop. But because it didn't make a new high, we know that we're done. So not always you're going to be able to see the trade right here. Okay, so sometimes, again, patience. Let the market show you what it wants to do, right? So if you would have been more patient, you would have started to see structure form. At that point, we got 1 and 2. Boom. Again, same thing. We know what the market's about to do. So you got clear trades on 3. You got clear trades on 4, right? So boom. At that point, we wait for 5, and we know that 5. Where can 5 go? Between 2 and 4. Boom. So at that point, now we're waiting for the reversal. So we've already pretty much tapped out at the 4 of equal low. There's a lot of other things that I'm seeing here that shows me why I'm expecting the reversal here as well. Also knowing 2 and 4, you can see 2 and 4, but also taking the measurement by Fibonacci. 5 comes at a specific Fibonacci points. One's going to be at 100%. One's going to be at 1618. So it's either it would either came here or would have come here. So it only has 2 points that it can come. So again, it depends on how deep and how big of a structure, depends on where that 1618 would actually land. So in this case, the 1618 landed here at 100% of 4. So if it would have been a different type of structure building here, this 1618 would have pushed down deeper, right? But because it didn't push down deeper, then this is where I'm expecting it to be. We also can see that we just swept this low. So on the lower time frame, we're going for just a sweep of this low, and we're going to more than likely form a double bottom here. So what I'm expecting as soon as market opens next week is for us to double bottom out and then us to head up. If we don't double bottom, it would take a little bit more time, and we would see a pattern like a inverted head and shoulders. Wedge. We could form a wedge. We could form a falling wedge. So something like this. So we can either form something like that, or we could double bottom, or we would take more time and we would form a left shoulder here, inverted, right? And then a right shoulder, and then push up. So those are the 3 options. Overall, I want to see it mainly respect this 1618. If it does head and shoulders here, it would be a slight break, and we're talking about immediate push up to where, like, on the 1 hour or the 4 hour, it's going to look like it closed below, right? But on the daily time frame, you're going to see it actually respect it, and it didn't close below. So something like this, like on the 1 hour 30 minute, you're going to see closures here, but on the daily 4 hour, it's just a wick. So that doesn't mean, if it's just a wick, it doesn't mean that it's broken. So as long as it respects this area and doesn't start to close, and if it closes, it has to have an immediate rejection after the closure. If it doesn't have an immediate rejection, then it becomes invalid. And so at that point, the closure would actually follow a continuation. So that's NZD CAD in a nutshell of what I'm expecting for next week. So continue to be patient. I'm expecting this to actually shoot up towards the beginning of the week as market opens, and to continue out into 2 and 4 range. So I'm expecting price action to push all the way back up to break at least this high, but we're actually going to only take it up into this range. So here's 2 and 4. So boom. So the true safe trade, we're going to close out around. Remember how I told you I only take 75%? So me personally, I know that it can equal out at 4. So I'm more than likely going to close it out around here. So that is NZD CAD update for y'all. Other than that, guys, that's pretty much all the education that I wanted to drop on for y'all for today. I appreciate all of y'all for tuning in. As far as for all of y'all that are students, y'all are going to expect way more education like this within the next 2 months, because I'm working on y'all's current course now, the updated course. So I'm going to be dropping all that new content for y'all very soon. So just stay tuned for that. For those of you that are looking for education, or just want to know how to trade a little bit better, or just want to know how that I could potentially maybe help you as far as like tune up some of the areas that you are weak in as far as trading, just shoot me a message, guys, and I'll get back with y'all as soon as I can to let you know potentially the route that we would probably want to take as far as for your education to getting you where you want to be as a profitable trader. So I appreciate all of y'all for watching the video today, man. Y'all have a great weekend. Be safe. I will see you all on the next trading week. Again, remember, over the next 28 more days, I'm going to be dropping out free education and signals in the community chat room only. So cheers to that. Y'all have a great weekend. I'll see you all soon.